Hello and welcome to Bradstreet CPA's Tax Tip of the Week video series. My name is Lance Bradstreet. Thank you for joining us here today. This video is being released on November 30th, 2011 as a part of our Tax Tip of the Week email series that comes out each Wednesday at 9 a.m. The Tax Tip of the Week email series this week is talking about year-end tax planning, and we're continuing the discussion of some of the upcoming tax laws that are either set to change or have already changed. If you want to check that out, it's always on our blog at bradstreetcpas.com/blog. But this week in the video tax tip of the series, I wanted to go in kind of a different direction and talk about something that we're continuing to see as a problem, and that is correspondence. And when I talk about correspondence, I talk about the letters you're receiving regarding any mistakes that the IRS, the state that you live in, and if you live in a state like we do here in Ohio that has local municipal taxes, you're receiving letters from them that might be questioning things on your tax return. And we're seeing a big increase in those in 2011 amongst all taxpayers. There doesn't seem to be a big trend. The IRS especially has admitted that those aren't always accurate. Statistically, people say that about 60% of IRS correspondence is not 100% accurate. And there might be a few things on it that are accurate. Might be some that there need to be looked into deeper. I'm revisiting a past Tax Tip of the Week email series, and that tax tip is number 115 if you want to check it out. And I picked that one because it's got 8 tips on what to do if you do receive IRS correspondence. And the first tip on there I couldn't agree with more is don't panic. It's never fun to see letterhead in your mailbox from the IRS or from the state you live in or the city that you live in. But the biggest thing is you need to not panic, take a look at it, open up the letter, read through it really thoroughly. And usually these things are somewhat complex and they are over multiple pages. I always advise people get out your tax return that the letter is referring to, compare the changes that they're suggesting versus what was on your tax return. That's always a good starting point. See if you agree with what they're saying. If you don't agree, then it's time to kind of go to the next level and make sure that if you don't agree and there's an amount due, the biggest thing you need to do is make sure you return a letter to them or answer the correspondence in the defined period that's on the letter. They usually have a very defined period, and if they don't hear from you and there's money due, the next step is they start the collection process. And if they're not hearing from you, usually these things get escalated very, very fast. It's all automated. Having not heard from you does not stop it whatsoever, and ignoring these things can usually make them worse and worse and worse. I always advise people it's best to meet with your tax professional in these matters, especially if they prepare the return that the IRS is questioning. They're usually going to have some insight or some strategies on how to approach it best. When I was saying that IRS correspondence isn't always 100% accurate, I'll give you a great example of that. I always say that the IRS expects the worst. For example, if a 1099 income has not been reported on your tax return, but it's been reported to the IRS, they'll go ahead and assume that all that 1099 income, self-employed income possibly, is 100% taxable. When in reality, maybe it was income where you had some deductions and some expenses related to it, and some of those things need to get knocked off the 1099 income before it all becomes taxable. There's a lot of things to think about, and there's a whole lot of different forms of this correspondence. Another form that comes is, unfortunately, people do get audited, and I always tell people, if you get audited, if you receive a letter saying, hey, we're doing an audit, and there's a couple different kinds of audits, always best to contact your tax professional or get a tax professional at that point in time. I've seen some really heartaches come out of people trying to handle their audits themselves. They can be super complex, and most importantly, they can be super emotional. And I think sometimes those emotions override some of the facts that might be in those correspondences and audits that come out. So it's always best to let your tax professional or your attorney go to the audits for you, let them handle it, and usually the turnout can be a lot better. So as always, thank you for joining us. If you have any questions in this realm or any other tax and accounting realm, please feel free to leave us a comment on our blog or reach out to us anytime through our website, www.bradstreetcpas.com. Thanks for joining us. Bye.